This is episode 30 of Zen and the Art of Real Estate Investing with my guest, Ricky Carruth. Ricky, welcome to the show. Thanks so much for being here.
My pleasure, bro. My pleasure. Good to be here.
Yeah, man, I'm really excited to talk to you because I've been following you for so long on social media, watching what you've been giving away for free for years. But let me give the audience a little bit of the bio just in case there's a slight chance they don't know who you are. Ricky is 20 years in the real estate business as an agent and investor, the founder of Zero to Diamond, which is a social media platform and free coaching program for agents to learn and collaborate. He is also looking to buy, is this right, 100 million in 2023 of real estate?
Yep.
Awesome. And if you don't know Ricky, he has over 230,000 followers on Instagram, over 95,000 subs on YouTube, and has just been giving away free information for everybody for years. How did you get started as an agent or an investor?
Yeah, man. No, I was 20 years old. I failed history class in college. I went to four different colleges in 2 years and decided to try real estate. So I was roofing houses with my father at the time and didn't want to do that forever. So yeah, I just kind of like fell into real estate. I'm in a really low population little beach town. And there's really not a whole lot of options. There's no Wall Street or big, buildings or, all these job opportunities or whatever. So yeah, real estate was really cool. It was a nice little, industry to get into. And down here, I sell mostly Gulfront condos. So, it's a very tourism, type area. So we have like 7 million visitors a year. So the beach, the condos on the beach is a really good market to be in as I got into the business and everything. So that's kind of what I fell into. And as far as investing goes, I mean, I started investing in as soon as I really got into real estate. I bought a house to live in, and then I started flipping houses as I started making money. And eventually lost everything because of that. I was over leveraged, flipping houses, didn't know what I was doing. And so, when I left real estate, I was completely homeless, sleeping in my car, eating out of people's refrigerators. I eventually got back into real estate in 2008 and just started building my business the right way. And as soon as I had enough money to invest again, I started buying properties. So.
When you first started, before it all went bad, were you also licensed as an agent, or were you just investing to start?
No, I was investing was always a secondary something to just kind of do on the side. Real estate, being a real estate agent was my primary. I got in the business to be an agent, to help people buy and sell real estate and make commissions, and that was really kind of the baseline, the foundation of my real estate career.
What was it all over leverage, which is very popular because you think it's going to be easy in the beginning. So you think you can do multiple at a time. Was it too many or just too much leverage? And then market downturn usually doesn't help.
All three. Yeah. So, prices were going up so fast. I was watching so many of my clients were making so much money flipping. And so I had money and, the bank was giving away even more free money at the time. And so it was really easy to get, financing and to get funded to go out and buy deals. I would just buy deals and sell them and make a ton of money. I mean, I made so much money. And I would, sell a house and then buy 2 houses, sell those 2 and buy 4 houses. And I kept building and building and building it up. And when the market turned, it turned so fast that, for the inexperienced guys like me, I just didn't know which way to turn. I mean, there were people that were 40, 50, 60 years old going through the same thing I was going through in my early 20s. So I was really grateful for that looking back. And I knew it at the time that that was going to be really cool. But no, I mean, when the market turned, I could not turn around and sell those properties for the profit I had projected.
Yeah.
And so, I just kind of held on, depleted my funds, paying the mortgages to hang on to those properties. I sold a lot of them for exactly what I owed and got out from under them. I ended up having to let some of them go back to the bank. And, I depleted all my cash trying to hang on, thinking, it wasn't going to last as long as it did.
Yeah.
and it depleted all my cash. Then I couldn't pay the mortgages, and I had to let those go and lost everything.
Yeah.
It was
How much
wild.
time did you take to reset, and then what led you to decide to go right back into it? What did you learn in the between time that helped you go to where you're at now?
2005 was I sold my last house, and I didn't start, making money as a real estate agent until 2008, May of 2008. Between February 2005 and May 2008, I didn't sell or have any hand in real estate whatsoever.
Yeah.
So I went back to roofing houses. I landed a job on an oil rig for a year. I was serving tables. I was doing all kinds of different things. But what I learned is that, well, I mean, number one, you can't, you have to have a long-term, plan. Like if they, you have to think worst case scenario, and then whatever you're getting into, is going to be a home run. In worst case scenarios, that's if you're taking investor money, or if you're betting everything you have on it. It's got to be worst case scenario, still a home run. If you've got disposable income that you don't care if you lose, then of course you can go risk that. And if you lose it, who cares? And really bet on some high risk, investments. But when you're talking about your livelihood, you really got to have worst case scenario is still you're still okay. And that's kind of what I wasn't prepared for, because I didn't realize. I mean, the golden rule for me growing up was to invest in real estate. That's the golden rule. But nobody ever told me there was a right way and a wrong way to do it, and you could actually get caught.
Yeah.
Plus, 2008 was one of those, once in a lifetime type crashes, I think, too, that, people didn't even realize that could even happen. It was just crazy times. So, yeah, I learned that as far as being a real estate agent, it's more about, helping people rather than closing deals and building that database and building your name and reputation and your marketing
Absolutely.
and all that stuff. Yeah. And on the investment side, you just have to be really smart and think worst case scenarios, with money that you can't lose.
Yeah, wouldn't you liken I feel the same way, and I know from watching stuff that you put out over the years that you really believe in that people to people connection. But I think that like some new investors don't even realize how important that is in the off market game. I mean, to acquire properties in mass, you have to be still good with the people, because you have to get them to trust you and you have to be trustworthy. So I love the play of the agent business with investing, and I always wonder like why everyone doesn't have their license. But did you learn a lot just from dealing with the people during that time that helps you in the off market game as well?
Yeah, kind of. I mean, it's about people at the end of the day. So, that can carry into the, real estate investing world as well. But the real estate investing world is a lot colder. It's just cold, hard numbers. These numbers work or they don't. There's definitely the people side to it, but not as much as trying to represent buyers and sellers on their purchases. That's a whole nother level.
Yeah.
And it's really two different, it's two different sectors, completely different sectors of the industry. It's almost like going and playing Texas Hold'em, 1-2 no limit versus, limit, or, 2-5 or whatever. But, it's two completely different games versus playing a tournament. Those all have completely different strategies. Same thing
especially
here.
Asset bases too. Your asset, if you're going like multi with, hundreds of units, obviously that is going to be full numbers calculation. Down to, mom and pop flipping is going to be a little bit of a different story, but the numbers always have to work.
Yeah. I mean, now with my flips, I pay all cash for my flip. I buy them cash and then I fix them and flip them. It's not a game I really love to be in. I just have partners that I love. So I want to maintain those relationships. Otherwise, I wouldn't flip at all, because like we flipped 100 houses in the last, say, 5 years. And if we would have kept 30 of the best ones, we would be so much more wealthier. We would have so much cash flow. We would be sitting in such a great position right this second. But we flipped it for, to make 10,000 a piece or whatever. And,
I mean, the margins are smaller where you are. You're in the Gulf Shores, right? The margins are smaller when you're doing mass flipping. So like if you're doing a whole flip to generate, 10, 20, 30,000, you have to just do it mass and get them out to make it worth it, right?
Well, and I mean, even then, it's not really worth it because you're paying all these capital gains taxes,
Yeah.
you know, and so that's the flip side to the whole thing. When you keep the property, you're not paying taxes. You get the depreciation, appreciation, and cash flow. Whereas when you flip it, you're putting money into it, and then you're flipping out of it to pay taxes on the gains. So if you go in and make 10,000, shoot, you made 5,000.
Yeah, right.
I don't know. I'm not a huge fan of the flip unless you're in this market or you have these situations where you can make 100,000 minimum per flip, or you make 300,000, or you can make $1 million on a flip or something. Then that becomes very interesting.
Yeah, I mean, I slowed down. I think now I'm looking to at least be at six figures on a flip, like you said, to make it worth it. But I'm in a market where there's a lot of opportunities for that, and in South,
Yeah.
it's just not that easy. When I was in Florida, I was able to find some, but there's plenty of towns where you have to do volume instead of, one-off's not going to work on the numbers.
Yeah, dude, it's tough where I'm at as far as that goes. So that's why I'm looking, like you said in the beginning, to go out and venture out beyond my market and try to get out there and buy some of these bigger deals, which I feel like are going to come through. I think we're going to see some really good deals on some big commercial deals and some big multifamily deals. You can't just double the cost of debt and in an industry where it is cold hard numbers and not see some really staggering effects. So I think we're already seeing signs of this happening, in the multifamily sector.
For sure.
And we'll see how it all plays out.
What's your ideal target asset like right now? Are you looking for apartment buildings? Or are you looking for some cross commercial type of place, or just
right
what
now?
are
I'm just
numbers?
Right now, I'm just looking at apartments, but I'm not opposed to. I have a guy that and I love commercial. I've got commercial buildings where I live, so I've got plenty of rentals where I'm at: duplexes, fourplexes, single families, commercial buildings, all over my county. But I don't. It's basically all owned by me. I've got a partner on a couple of them, but what I'm talking about is going out here, finding the deals, raising the money, and doing these really big 10, 20, 30, 40, $50 million deals. So I've looked at about 50 plus deals in the past 6 weeks. And, we haven't seen anything that we're like, man, that's a home run.
Yeah.
And that's because prices have just escalated so much. Rents are maxed out. I think we could possibly see rents continue to maybe go up, but if they do, just by such a small number, whereas a lot of these guys are buying these, 3 and 4 caps with the expectation they're going to raise rent 20% a year, and rents are already maxed out, So if I can find something that rents haven't been, raised in years, 2-3 years, and whatever. There's some deals out there, of course, but man, they're so far and few between. Everybody wants an arm and a leg, and the cap rates are so small. Cap rates, cap rates, shrinking. Interest rates exceeded cap rates for the first time several months back since 2008. Just something's going to give there. You can't, like I say, double the debt. You saw the article that there's 175 billion worth of global commercial debt that is that's delinquent right now. That's just a complete red flag right there. That this is the writing's on the wall with these big deals, and I think it's going to take a little longer for it all to flush out. But I'm just sitting here looking at every deal that comes past me. I get deals thrown at me all day long.
Yeah, I bet. But I think you're showing that you obviously have the resources to close the deals, but it's so much more important to be patient, especially when people are serving you what they consider are good deals. I feel like sellers are still being stubborn now, and at some point, like you said, that's going to break, and then the deals are finally going to start making sense, and it's coming soon, I think.
I do too. Like I say, we're already seeing the first signs of it, with some of this stuff sitting on the market, and, people aren't interested, man, when debt's twice as much. And even
Yeah.
the people that are paying cash. I mean, if you're paying cash, you want to, if you've got that much capital, you're not just going to deploy that into an asset, is going to come down in value.
Right.
Right. So even the cash buyers, they're wanting deals. So like, people know that and it's different than residential. Residential is a lot more solid. There's no supply. There's so much demand. We're already seeing multiple offers on properties all over the country again.
Yeah, absolutely. We saw lines this weekend. There was like during the pandemic, we saw the huge lines at open houses just because of access was a little bit limited, and it was crazy. But like, the lines were back this weekend. That was kind of a shock. Like, okay, it's not what everybody said. Like, people are still buying. But you're right. Like, commercial as an asset, there's so much large scale commercial available after the pandemic that now it's really, for those of us who like it, is just waiting out to see when they're going to get realistic. I mean, if somebody told you 5 years ago that people would be like fighting over 5 caps, we would have all thrown up. I mean, like, back then everyone's like looking for 10 caps, and now it's like you said, California, 3 cap sounds good, which is crazy to me.
Yeah.
But
no, 3 cap doesn't sound good. And that's the problem is the people that are buying them, they're going to be in for a rude awakening, because if the value drops way below where they bought it for, and even if they could raise rents, which I just don't think they're not going to go up like they were. Yeah. Even if you could, if that is in fact your strategy to say, okay, we bought it at a 3 cap, all we have to do is raise the rents, and then the 3 cap is now a larger purchase price because the income's higher. Well, all you're doing is even if that were the case, like, I think best case scenario, you sell that property for what you bought it for at a 5 cap or a 6 cap. You raise the income just to get it up to what the cap rate's supposed to be, and then people buy it for exactly what you paid for. But that's best case scenario for those guys. I think what's realistically going to happen is rents aren't going to go up. Now people want to buy that at a 5 or 6 cap, so it's worth 50% less than what you bought it for. I think that's the kind of stuff we're going to see out there. Some really wild stuff.
Yeah. I mean, over the years, what's been like one struggle that you've seen for just general investors? Obviously, you're a coach, so you're really trying to help people do the right thing. Where do you see investors getting hung up all the time? I mean, the market's changed a little bit, but over your years, where are you seeing like the biggest investor hang up?
I don't know. I think it's different for everybody. Your entry-level investors, your more seasoned guys, and everybody in between. People, raising money, there's people out there that can't raise money, if they want to, and you got people that don't know what they're doing that's raising money, which
that
also
is very big. Very big.
Which also presents a whole nother problem, because, it's interesting because right now syndication is a real, trending, word. People are out here syndicating deals that have no idea what they're doing. The investors are saying, "Oh, thank God, I'm finally in on a real estate deal," and and it's a 3 cap. Yeah, and it's just not going to end well.
Yeah.
So
I feel like I was saying a couple episodes ago, I feel like some of the bigger syndications they're good marketers. So they're able to catch the investors with cash who are like, "Ooh, this sounds great," but they don't have they don't even have as much money as everyone thinks, which then puts you at risk as a partner in the deal. But they can make it look so shiny now, And
the thing is that the syndicator's getting a fee when it closes. Then they're getting all this free depreciation because they didn't put a dime into the property. They're reaping all these benefits. And if the game plan is to raise rents and sell it in 5 years, I mean, it's, maybe the market goes down and back up before then. I don't know. It's going to be interesting to see how it all plays out. But I'm just sitting here, like you say, patient, because when, I want people to know that when I say, okay, here's a deal that we can invest in, people are like, okay, Ricky's turned down 100 deals so far. And this is 1 out of 100 that he has finally found that he thinks this is something.
Yeah.
And I want people to have trust in, how I evaluate these deals and what I'm actually willing to put my name on the line for, that, this is a deal we want to get into. So, and then, do the best I can do to make that investment extremely successful, and, have people that want to reinvest and reinvest and reinvest and build that following up.
Yeah, I feel like you've given away so much information for free over the years that you've built the trust dialogue where you could just put out, and like exactly like you said, now at this point when you say I'm going to do a large scale syndication, there's so many people for years who have trusted you, they don't have to overthink it. When you look back to when you started really going in on YouTube and social media, on just real estate in general, what led you in the beginning to do kind of the opposite of what everyone else was doing and just like give away all of your coaching and ideas for free? Because I've always valued that principle, and I see it like year after year, you're still doing it and it helps so many people. Why did you think that when other people were thinking, how can I monetize this?
Well, I tried the monetization route for a good 6 months, and it was like beating my head against the wall, especially in the real estate agent world, where you have the thing is if you need help in real estate, chances are you're strapped for cash. And, if you don't need help, then you got plenty of money. So, maybe I should have geared, a product around the people that had money, that could help them.
Right.
But I didn't. I went after like newer type agents that were struggling, trying to reduce the failure rate in the industry and stuff like that. But what's been interesting is the way that I looked at it was that if I go free, I'm going to open up the floodgates and I'm going to build this massive following, right? And what's going to end up happening is a lot of these people that are struggling now or that are new now, they'll turn into really high producing and successful agents over the next 3 to 5 to 10 years. I'm 6 years in right now, or getting close to 6 years in doing the coaching. I'm just now seeing signs of people. Like I have 2 people that I know of that are number ones in their MLS, tons of people that are top 10, and many more on the way. And like the new agents that are getting in right now that are getting into my program, I'm not going to really see those guys, shine for 3 to 5 years or even 8 to 10 years. And so I'm looking so far ahead that some of these future mega influencers and mega producers and pillars of the industry are going to have been part of my program from the first day they got in the business. And so eventually I will have this really concentrated group of really, really high producing, high quality business people. And it's already happening. I've already got that now, but it's going to get better and better and better. So I kind of had to start from the bottom, but I had to kind of do it like that because I felt like I wasn't growing fast enough. And when I say grow, I mean people who know who I am, they know what I'm doing, they understand the logic. And, honestly, I haven't hit a home run on anything monetarily speaking. I mean, well, for many people, I'm sure I've hit home runs, right, in their world. But in my world, I haven't really hit that one out the park where boom. So that's why I'm still grinding so hard, is to just continue to build the influence, help as many people as I can and try to develop those relationships and collaborate into other businesses,
Yeah. So, I mean, when you look at it over the long haul, this is a question I've been wanting to ask you for a long time. How valuable do you think having a license is for not just for an investor, but investor who wants to do both? Because I've always thought, like, I don't understand why real estate agents don't invest. They have the access, they have the resources, and then you find probably, 99% of agents probably have no investments. That's crazy to me. What do you think about that in terms of having your license? I mean, I feel like everybody, if you're licensed, should be investing.
Yeah. That's one thing that I'm trying to do this year, is try to be a little louder with agents who need to invest. Trying to take my following, who is, 99% real estate agents, and say, hey guys, you need to be investing. It's the end game for real estate agents.
Yeah.
what can I do to help you, create a game plan around that. So that's something that I'm doing. I'm going to try to create an investment group, where, we're collaborating on this kind of thing. But yeah, it's crazy. A lot of real estate agents don't buy real estate. And I think what it is that they come from this, working world, and like being a real estate agent's another job.
Yeah.
Right. And they're never really in this investing mindset. I think more people are now than ever.
Yeah. Yeah.
But I think
agree.
overall, generally speaking, that it's just another job. And that's what it was for me. It was just another job. I was lucky enough to say, okay, how can I use my money to make more money?
Yeah.
But I didn't really even understand, the real true benefits of real estate investing till really here recently. I mean, some properties, some duplexes and stuff that I bought back in 2011 and 12 that were really just crap properties. They've turned into some of my most prized possessions,
Yeah.
I mean, they've went up so much in value. The rents went up so much. I bought them for so cheap.
But you held them. I mean, like you said in the beginning, I mean, the short term versus long term is so important in all aspects of real estate. I think people are like scratching to get money or to get success, and they just don't realize like it's not going to happen overnight. But you could have taken those and say somebody offered you a year later, a $5,000 profit. A lot of people would just take that, but then you could lose $100,000 over the next 5 years by, giving in and thinking that was going to be a score.
Yeah. Yeah, exactly. I bought them to keep them, right? I bought them to keep them forever. I mean, I could have sold them at the peak for just god awful number.
Yeah.
I almost did sell a fourplex because it's just been a pain managing it, but I didn't. I was like, nah. And, now rents are just so high. It's just making so much money.
Yeah.
So, I didn't really, if I would have known, I would own more property now. If I knew back then what I know now, I would have put everything into buying properties because, I'd be so far ahead. But you don't think about it because like agents, like I'll talk to agents about investing and they're like, well, I'm going to make $200 a month, and I'm going to be managing it. I'm going to be doing this. I'm going to be doing that. And I'm like, but dude, you're going to get all the appreciation.
Yeah, they forget about appreciation. Yeah, exactly.
You're going to get your debt. The debt you take on is going to get paid off by the property over the $200. You're going to be able to do depreciation on the property and write off, have write-offs for your taxes. I mean, you got 4 ways to make money: depreciation, appreciation, cash flow, and debt, pay down. Principal pay down. It's not just $200. It's so much more. I don't know, man. Appreciation. I saw a thing where I think it was NAR, maybe. They basically said the average sales price is going to go up 100,000 per decade. So like in 2020, it was 300,000. 400,000 in 2030, 500,000 in 40, 600,000 in 2050.
Yeah.
I mean, that's pretty tough to, say what prices are going to be in 10, 20, 30 years. That's basically impossible to do. But, when you look at inflation and when you look at everything, all the other factors, like, real estate is going to increase in value, and you really kind of want to own assets over, owning cash,
Yeah. I mean, I think I grew up as a cash investor, the same as what you said. And then I still continue to mostly invest in cash when I can. But I think people get lulled into, like you said, when you were buying early, it was just so easy to get basically what you think is free money at the time. But then you can mismanage that. And I feel like that's what I think of when I think of hard money. I know you don't have to use it, but a lot of investors out there who are starting and flipping have to use hard money, and they think somehow this is, easy. But I feel like you can get really dunked on hard money real quickly, especially with the market.
I'm not a big fan of that, honestly.
Yeah, same.
If you're like newer and you're trying to flip houses with hard money, I mean,
so risky.
like personally, like go do what you want to do, listen to whatever guru you want to listen to, right? But just personally, I'm not a fan of that because, it's just super risky. I mean, I don't know.
The rates and points are so high, and you also have no experience in doing what you're doing. And I think people who are flipping, obviously you flipped a lot of houses, like just something always goes wrong and their numbers are always wrong. So you're really like, setting yourself up for just colossal failure. I really like new flippers. I'm always worried about 24/7 because I just feel like it's the easiest way to lose all the money.
And that's what I did. I lost everything. I mean, I made $1 million and lost every bit of it. So now I pay cash for all the flips. I have 2 other partners on that. And then everything that I buy that's like long-term, I take on as much debt as I can, 20% down. So I don't have the PMI, and I put 20% down and rent it out. And, the plan is for it to pay itself off in 30 years. And, rents continue to go up. It appreciates, nothing to worry about.
Yeah, I feel like in the investing world, everybody's so obsessed with cash flow and they just like discount appreciation, where of course you make so much more money in appreciation over the lifetime if you can just relax. But it's just like cash flow, I guess, is sexier to people to talk about, just like they talk about how many doors they have. It doesn't make any sense. Nobody really cares. It's how much you're taking home and how much, better a life you can have by doing it all.
Yeah. And what's dangerous is short-term appreciation. If you're planning on what it's going to be worth in 5 years, that's a horrible game to play.
Yeah.
Or even, next year or whatever. It's good to say, okay, we feel pretty certain this property is going to be worth more. Any property is going to be worth more in 10 years, in 20 years, and kind of look at it on that basis.
Do you have any short-term rentals? Because I know you're in a vacation type market. Is that something that you're messing around with as well?
I've owned a bunch of them. I'll buy them for a couple years, sit on them, rent them out, sell them for big profits. I mean, I've done that, but I don't have any right this second. As the market, those were all short-term investments. Like I never wanted to own any of those long-term.
Yeah.
They were all, here's a good deal, feel pretty good. This is a great rental at a good deal, in a good building.
Yeah.
And I can buy this and, see what happens appreciation wise over the next couple of years and sell it.
Yeah.
So I rode the wave up, and really sold at the peak really on a couple of them and did really well. One of them actually, we bought it for $270. It's me and a partner. We put 20% down. So it was like 30 G's a piece, then we sold it for $4.25 just a couple years later. And then we took that money, 1031'd it into a commercial building for $450. We're renting it out for $4,000 a month. We put up another like 125 a piece. 125 a piece, right above above what we had coming off the condo. So right now, I was in it for 150,000 total, on my side, cash. Right. We refied out of that 450 property for 300, got our 150 back. So I got my 150,000 back.
Out.
Yeah, I'm out. The note, we make about 2,000 a month on top of the note and everything. So I'm making $1,000 a month. Complete infinite return.
Right, exactly.
Zero money invested at this point, and it's making $1,000 a month. And so now we're going to enjoy depreciation, appreciation. It's paying that new debt off. And we've got $1,000 cash flow on something that I put 150,000 into it, but I got it back.
Yeah, now you have it back. Yeah, you talked about partners again. I mean, I guess help for other, investors and new investors and really experienced investors. What have you found, not the best way to find partners and then the best things to look for in partners? Because I think it's really important in deals because partnerships can go so haywire in investing. What have you found are the most important things for you when you link up with a partner and this is going to be good?
Well, the partners I have that we work together on these local properties. These are people like the one guy I did the condo deal with. We went to high school together, right? And then the other partner we have on flipping, he was a client of mine for like 10 years
Yeah.
where he, bought and sold stuff. And, we were like, he was like family, we're eating dinner together and everything else. So, and it's not like I went out and pursued these partners like, hey, let's be a partner on this. It's just something that just kind of happened, right? So I didn't go out and actively looking for partners. It just happened to be like, hey, there's a deal. Do y'all want to throw in on this? The next thing you know, we're flipping houses every
Yeah.
month.
Yeah.
So it just comes from trust of knowing these guys for so long and seeing them in business and knowing their reputations are and stuff of that nature. Now, when you get into like investing in these big deals, you've got the general partners and the limited partners. The limited partners basically the ones that put the money up, and they're basically almost silent partners kind of deal, where the general partners are the ones kind of running the deal. They find the deals, they manage the deals and everything else. So the limited partners don't really have much to worry about. They just have to really trust the general partners. They're going to go out and do their job and increase the rents and the value and maintain the properties and all that good stuff. On the general partner side, again, it just has to be people that you really, they're like family. I mean, it's not good to be in business with family, I guess. It's probably not a good
that can go haywire
example, but I don't know. The guys I work with on the GP side are, guys I've been in business with and worked with for a really long time on other stuff. And I think that's pretty key. It's hard to take someone you just don't know off the streets and just be partners with them.
Yeah.
That's tough,
I agree. I feel like too many people try to do that in flipping, whereas one's the money and one's the work, and that just never works out because it's not really an even trade like that. Like if I have to partner, I'd prefer everything to be 50-50 with the partners. Like if it's just because then you just know you're in it for the same thing. You got to make those decisions together and figure it out. But like you said, it does get a little bit confusing with the GP-LP situation and what you want. But like, if the GPs are great, you can just coast along and take that return and say you're investing in 100 doors, I guess.
The guys I flip houses with, one of them does all the work, right? But we all put up a third of the money when we buy the property.
Yeah.
And then the guy that does the work, he bills us.
Yeah, that's perfect.
He doesn't charge us near what a contractor would bill us for. But, we go thirds on, he even pays a third of his.
Oh, okay.
So like he bills us and everything's split three ways on everything,
Yeah.
So
I want to get your take on this before we wrap up. Like you're so well known and on YouTube and on Instagram, and I've heard you talk about this before, and we actually talked about it just a little bit for a second before. What do you think on the investing side of all these what I call fake gurus? There's a lot of great people in the investing space who I feel like give a lot of good advice, but there's just a whole ton of fake stuff out there, and that's what I think makes it hard for real estate investors trying to figure out who's selling a class or who's selling like a future of learning really how to invest. What have you seen out there, and what do you think people should look out for?
Well, I mean, it's the wild, wild west out there, because you can start a channel and you can go out there and basically say anything you want to say. There's nobody, watching this stuff. That can shut you down and say, oh, that's not true. And, a lot of this stuff is based on opinions too, what strategies you use and how you do it and stuff like that. So it is really tough. It's just like anything else though, right? Especially in today's world with social media, there's so many people that just think they're the geniuses of everything, right? So you have to take everything kind of with a grain of salt and look for the people that, that you have, feel like are super genuine and that you really connect with, to have the results, to speak. It's hard, honestly.
Yeah, it's messy out there. I feel like, you're a great example of someone who has, again, given it away. And then like now, of course, you have coaching programs, but like, I don't feel like you're not the type of person who's trying to like push everyone into a funnel. Like you're like, hey, this is available for you if you want to do this, but also you just keep pounding out the content every day. And I think that's where people might be able to see, you know, if you click on one thing and then you get onto like an email list and you get 50 emails in a day, something's wrong. You know, like the value proposition is off there.
Yeah, yeah, everybody's trying to push their thing and get their products sold and stuff like that. And I'm just trying to build community. I'm just trying to build a network of people who, you know, want to collaborate and want to learn from each other and kind of adapt as the world changes with technology and communication and stuff like that. I'm just looking 5 to 10 years out on everything.
Yeah.
You know?
Yeah, it's important. I think one thing I found, like in investing specifically, because we do like in-person meetups, and the camaraderie of investors is so important, because like you can watch people on YouTube, but that doesn't mean you can go out and do it. Like you have to like collaborate, like you said, with people who are doing it. I want to learn from people who did 20 more deals than me, and then help people who are just trying to get started. But like investing is, people are so excited to try to do it that you really have to get in person, meet people. Obviously, it helped to have Zoom available after the pandemic. But yeah, I like what you said. I mean, the collaboration of your group, which is agents who are going to all learn to invest, is so important on the investing side as well.
Yeah. You know, experience, right? Experience is really where you learn. I mean, you can collaborate and you can go to seminars and watch YouTube and stuff like that, but until you actually step into the arena, and do some deals, and really it isn't until you know, do a few bad deals.
Yeah, for sure.
You know, until you really lose on some deals, you're really just floating. You know, you can't really tell anybody. I heard so many, it was crazy, because like I used to hear agents talking to their clients, and they would be advising them on investing and stuff like that, and they'd be saying the wildest things. I would be eavesdropping on the conversations, and I just remember hearing agents say the wildest things, and I'm in the back of my head thinking, man, this agent has never lost on a deal. You know, like they've never, you know, lost money or lost their ass. They never lost, like, you know, went bankrupt and stuff like that. And so it's kind of hard for them to really say what to do when they don't really know what not to do. And they're out here telling people, you know, what to do when it could be the exact thing. And the person listening is like, oh, yeah, tell me, agent, tell me. Yeah, this sounds good. You know, let me do this. And I'm like, man, you know, be a little more cautious and be a little more patient.
Yeah. I mean, one last thing on this part. I feel like we were talking before about agents who should invest, but like I think one of the hardest things is that I've found over the years, and the reason why I started my team and helped them all become investor friendly as well, is because most real estate agents don't know anything about investing. So when you have a client who wants to invest, like I can overhear the things. I'm like, are you serious? What they're telling them? Like they don't understand anything about when to use cap rate, you know, what's good, what the cash flow is. They don't take into account property management, you know, as a percentage. They don't know how to do CapEx. They don't know how to do repair costs. They have no idea about anything, but they're trying to give advice. And there's only a really small subset of real estate agents who can also give that advice as investors. Do you agree with that?
Yeah, and they're called commercial agents, right? They're called commercial agents that have been in the game for a good, you know, 2 years plus, and that's really still pretty new. But yeah, it is, man. Because, well, that's a completely different ball game, you know, getting into the investment side. I was lucky enough to be in the condo game where people bought them because they want to take their family somewhere really nice in the summer, but they're also buying it as an investment. And so I was really, the type of properties I primarily sold were really in the gray area between residential and commercial, right? And I got to really kind of taste both sides of the emotional attachment to a property and buying it because you love the color of the floors. Yeah. And also, you know, the cold, hard, you know, investor side of it as well. You know, it was really cool. But I got to, you know, spend most of my career dealing with that. And trying to make the wife happy on the colors and the husband happy on the numbers, you know? Yeah. And so I got a nice taste of investment, even though I was in the residential world. But I mean, people that are just doing primary homes and not second homes like I was doing. I mean, this investment stuff is like a whole different
Absolutely.
language,
Yeah,
you
I
know?
agree. I agree. And that's why I think it's so important for investors to do that research and find agents who are also investing and understand what their portfolio looks like, how many deals they've done, because that's what's going to help them grow instead of, most agents are just looking for a commission. So they want to just get one sale, but that's not what investors want. They're trying to build a whole portfolio. So
Yeah.
over your 20 years, Ricky, if you could look back and give, like, I created this podcast, to focus on the mindful approach to real estate investing. What advice would you give, like, investors right now in this market that you think would help them have a more mindful approach to what's coming and what's out there?
Well, nobody really knows what's coming, a lot of people want to think they know what's coming, but, right now, there weren't too many people that were calling for this multiple offer situation that we're having now. I've been saying it for months that, lower, inventory dropping like a rock, interest rates dropping like a rock, and, demand still building.
Yeah.
This wasn't hard for me to see what was going to happen, but honestly, it's like, this isn't the best of, situations, because if we start seeing multiple offers and the housing market really start heating back up big time, well, we already saw lumber
Yeah.
prices jump up, right?
Just went up.
That's just the beginning signals of inflation. I mean, that's in essence the definition of inflation.
Yeah.
And if inflation goes back up, if we see that start to rebound, then we're going to see 30-year fixed rebound as well. And, this time they may not play with it. They may go way up because they say, okay, well, what we did last time didn't work. Let's
Right.
really pour it on and see what happens, and that could really put us into a serious shift.
Yeah.
So nobody knows I could see what's happening now happening, but what's going to happen past, this little period, I mean, who in the world knows? I think we're going to have a really incredibly strong spring. I think we'll see a huge rush of buyers, a lot of demand, no inventory. It's going to be crazy. But then what happens after that? And so if you're an investor, I think flipping houses is probably done for right this second. I don't think anybody should buy a house thinking, oh, I'm going to flip this.
The buy-in's too high.
Yeah. Well, yeah. I mean, even if you buy it at the, depending on your market, you're down anywhere from, 10 to, 30%. Well, I don't know. All the local markets are different, but, even if you bought it at that 10%, rate where it's down 10%, even if you bought it at that new number, we still don't know exactly where it's just, there's too much uncertainty right now in the market for that short-term, investment. Right now, where we do feel very certain is the long term. That I feel even if prices come down some, from where it is now or how long this thing takes, I still feel like in 10 years that you're going to see some really great appreciation on your properties that you own. So
Yeah.
I think walking into situations, buying them on the current cash flow, and looking at it from a 10, 20-year standpoint is really the mindset you should be in right this second. If you can find something where you can buy it for 50 cents on the dollar of today's market value, sure. Right. But where are you going to find that?
Yeah. And what's it hiding? What's it hiding if it's at that value?
Yeah.
That makes,
I think right now you just got to be in a cash flow, long-term perspective when on your investing.
Yeah, I agree. Our 2023 investing term was asset hunting this year because I think people are a little bit over focused on like just numbers and like just what you're saying. If you can focus on the asset and like, okay, here's the cash flow. It's whatever it is, $200 a month, but it has the potential to go so well because the area, the dynamics of that. That's an asset. And I think people forget to focus on the asset in real estate. And that asset is literally everything. Because you could even withstand like a little bit of negative cash flow if you're smart and what's coming. You might be wrong, but if you're right, you're going to really win big in the long run.
Yeah. I mean, like I say, if when you buy, if you're looking at very, very worst case scenario that you're still a winner, right? I mean, one thing I feel pretty certain on is that rents have escalated really high. you know, a lot of, I see a lot of data that rent's going to continue to go up, but only at 1 or 2% a year,
Yeah.
or something like that. Wow, if rents maintain the level that they
They're
are,
insane now.
yeah, that is crazy if they don't go down.
Yeah.
That just tells you how strong that market is. But, I would say, okay, like, all right, prices go down, 30 to 40%, and along with rents. Okay. You buy a property and the value of it goes down 30% and the rents go down 30%. Okay. Are you still in good shape if that were to happen? That's what I want to look at.
Yeah.
Am
Right.
I
Are you
still in
okay?
good shape? What's my game plan at that point? Values go down 30% along with rents. What then? Am I still in good shape? And what's the chances of that happening?
Yeah.
Rents going down 30%, that's probably a very long shot.
Yeah.
Now, if
Very.
you're in multifamily and you buy today, it's not that far off that it doesn't go down 30%. If you're buying a big commercial building, that could bring you back to, okay, why don't we buy fourplexes and, 4-unit and lower properties so that we can get a Fannie Mae 30-year fixed and we can ride it out for 30 years if we need to.
Yeah.
Right. So there's a lot of different things to think about.
Awesome, man. I really appreciate it. Let me give all of these people, if they don't know you, let's make sure they know where to find you. So on Instagram, it's Ricky Carruth. That's Carruth. And YouTube is the same, right? Let me just pull that up.
Carruth.
Yeah. And then tell us a little bit about Zero to Diamond. I know that's an agent-based coaching platform of yours, but what's that all about and how long have you been? You've been doing that for 6 years?
Yeah. So started doing that 6 years ago. It's literally a course. I've got a bunch of courses, like 6 or 7 courses in there, scripts, videos of me making calls, 60-day challenge, marketing, social media, everything, anything I could think of. And so I update it every year around the end of the year and just update it, for whatever I learned throughout the year that I can add to it. But it's also a platform, social media platform for agents to connect and, create your profile and, DM people, create groups, post on your wall, all that good stuff. But no, I think there's like 20,000 members there now. We switched it over a year ago. We had 50,000 members on the old platform, and we switched it to a social media platform where everybody could connect. Before it was just a website you go to and take the course. Yeah. Now it's a website you can go to and connect with all the other agents. And so, yeah, it's just continuing to build that community. But, like I say, man, there's been so many agents who, are crushing it, using the philosophies and strategies there. So, I answer all my Instagram messages every day. So that's really tough to do, but, I spend hours.
It's really worth it though. Even at your level, don't you think it's worth it? I mean, all of us know when it's not this person in the DMs, it becomes like, why do I want to talk to an assistant there?
Yeah. So far it has been, because people, feel like, wow, I'm really connecting with the person.
Yeah.
There's a lot of debate there, There's a lot of debate there about time spent, ROI on time.
Yeah.
And, making myself so available, to the public. But the thing is, for me is I'm a grinder and, I come from such humble backgrounds that all these people are like, they need so much stuff. And I feel like I'm kind of letting people down if I don't listen to those questions and problems and kind of help them through those situations. So it's just something I do. I can't say I'm going to do it forever.
Yeah.
But it's something I've maintained up to this point. So we'll see how that goes.
Yeah. All right, man. Well, it's been an absolute pleasure. Hope everyone will hop over and follow you. They probably already are, but it's been great talking to you and great to finally meet you. It's exciting to talk investing with you. So I really appreciate your time.
Yeah, man. Enjoyed it. We'll do it again soon.
All right, man. Thanks. This was episode 30 with my guest, Ricky Carruth. We'll see you next week.